First and foremost, let's remind you, if you are a part of my school community, you will be getting a couple of, classes. First at 8 a.m. or about 30 minutes from now, we will be going live inside school for just Q&A. Ask me about housing, ask me about economics, getting started, whatever you would like. It's an open book. I look forward to seeing you there. And then a special treat, if you are a part of the school community at 9 a.m. or about 90 minutes from now, you're going to get to be a part of a conversation with the uneducated economist. Yes, folks, Simon in his car with his dice will be speaking and interacting with the school community. So I look forward to bringing that to you. Let's talk about the economic news of the week. Let's start on Monday. And unfortunately, Monday and Tuesday are all about the Fed. More specifically, about the Fed presidents. Yes, in the span of 48 hours, Monday and Tuesday, we will get seven Fed speeches. And I'll be looking for a couple of things. One, will we start to see some Fed presidents take victory laps? What might that look like? Well, they're going to be less hawkish. They're going to talk about the trend. They'll talk about the second half being better than the first half. And really what we might see by the end of Tuesday, rates go even lower. Now, it is possible that the Fed surprises all of us and talks hawkish. Although if the Fed wasn't willing to talk hawkish after 3 months of inflation performing worse, I don't think there's any chance they suddenly get a backbone and talk tough. But again, we will see Monday and Tuesday. And again, if the Fed keeps talking dovish, if they start talking rate cuts this year, if they start talking rate cuts this summer, you will see the 10-year fall. You will see mortgage rates fall. And as we've talked for weeks now, if mortgage rates fall or the spread collapses, even more gasoline on the fire, we might see the housing market change overnight. That will bring us to Wednesday. Wednesday is an important day for this channel. It's existing home sales. Remember last month, folks, the experts got it wrong. We got it right. The experts this month, last month was 4.21. Experts are calling for a slight downtick to 4.19. I will once again take the over. I do not think the powers that be watching this market understand that buyers are going on tilt. We've had buyers shopping for 2 years now. And at some point, you've just got to say yes. So I'm afraid that we might see a higher number on Wednesday. Also on Wednesday, we will get the Fed minutes. I'm going to be pretty interested in these Fed minutes. Usually they're pretty boring. They're nothing burger. But I'm curious. Michelle Bowman, specifically Michelle Bowman. Michelle Bowman was the first Fed president to talk tough, to make the important decision to threaten to go higher. She has since been followed by one other. The name escapes me. But I want to see if there were any other discussion about going higher or what might it take to go higher. I think that will be very interesting to parse the Fed minutes. Thursday, we will get some PMI, flash PMI readings for both services and for manufacturing. I forget, but I believe I'm correct. Both of those were down last month. I think manufacturing was in recessionary or contraction. Folks, again, remember these numbers are on a basically above and below 50. Below 50 is contracting, above 50 is growing. So we'll be interested to see how manufacturing and services are doing. Then on Thursday, we will also get new home sales. New home sales last month were 693. This month were 675. I again will take the over. I think we have seen an undoubtedly builders know how to meet the market, right? They issue 5.5, 5.49, 4.99 interest rates. They know how to move product. Plus, I believe more and more builders are slowly building smaller properties. So again, I will take the over on existing and the over on new home sales on Thursday. Then on Friday, we will get durable goods. This one actually surprised me. I had to double check my source to make sure I wasn't reading fake news. Durable goods last month were up 2.6. Durable goods, of course, if you don't remember, are goods that are expected to last 3 years or longer. Durable goods last 2.6. Estimate, negative. They are expecting a contraction, a retreat of 0.5%. That's a pretty big swing, right? You go from positive 2.6 to negative 0.5. Yeah, that would be the consumer pulling back. More on that later. Interesting article out of CNBC. So again, that is the week for economic news. How about the week for earnings? We got some important earnings this week that will undoubtedly be market moving and quite possibly validate a recession or not. On Monday, we get Palo Alto Networks. Remember, folks, we've been talking about Palo Alto Networks on this channel for a long time. Why? Because they are in the cybersecurity space. As somebody who sold software for roughly 20 years, the last product line that will be cut from budgets is security. And if you don't remember, Palo Alto issued a very weak guidance last quarter. So we will be paying attention this quarter. Are companies pulling back? Are they loosening the purse strings? I think Palo Alto Networks Monday after the market closes will be telling. Tuesday, Macy's, Lowe's, and Toll Brothers. Macy's, how is Middle America doing? Lowe's, are we going to get validation from Home Depot that we're pulling back on big spend? And then Toll Brothers. Toll Brothers is a higher end builder. Are they still moving product? Are the rich still rich? Are the rich pulling back? What is going on with Toll Brothers? Wednesday, we will get Target, Nvidia, and Petco. Again, Target, what is going on with Middle America? I guess Target will be interesting because Walmart highlighted that higher end consumers are coming to Walmart. So I'm curious, is Walmart's win Target's loss? We will find out on Wednesday. Nvidia will undoubtedly be market moving. Is the AI boom still growing? Can they still not make enough chips? We will know on Wednesday after the close. And then Petco. Petco was one of those darlings during the pandemic. What is going on with our pets and the like? And then on Thursday, we will get Ralph Lauren, TD Banks, and Ross Stores. Ralph Lauren, kind of a higher end retailer. Have they gone the way of Lululemon? Ross Stores. Is Ross Stores winning while maybe Ralph Lauren loses? I think we will get a clearer picture on the consumer. And then TD Bank. I want to know what's going on with that second tier bank. So again, lots of earnings, lots of economic news. I do want to remind you folks that the game of money is being played 24/7, 365, 24 hours a day, 7 days a week, 365 days a year. You are either playing or you are getting played. You need to understand the path to wealth is rather simple, but takes time. A lot of folks are sitting on the sidelines doing nothing. I think that is a mistake. I think it is time to do the work. If, big if, huge if I am right, and the next 18 months are harder than the last 2 years, that should be a sign, a key to do the work. Because if you don't understand how this freaking thing works, you make your money in the hard times. You find the opportunity. You find that motivated seller. You find the way to structure a deal. We have been waiting for these times for seemingly 4 or 5 years. If you don't remember, back in 2019, yes, 2019, I told you I sold one of my apartment buildings. The apartment building at the time was trading at sub 6 cap. In my market, they typically trade at 7.5 cap. I thought it was overvalued. Now, in hindsight, that building went down to sub 5, so I left some money on the table, but it was the right move. I believe what's coming up is a chance to go back in and buy buildings like that at an 8, 9, maybe a 10 cap, because the music stopped. We talked with Jonathan Twombly last week about what is going on in the commercial market, and there is truly some deals coming down the line. We once again see Grant Cardone buying buildings cash. That was an interesting discussion with Jonathan. So again, play the game of money. If you want financial freedom, you want options, you have to play the game of money. Let's talk about voters. Man, the average American. Whew, we know how to pick them. So about 5,000 American voters were given a list of things about how to fix housing. How to fix housing. And what was interesting was the most common and the least common. I don't know why. I shouldn't be shocked, but I am shocked. Let's go with the least. Folks, this is the least voted on way to fix housing. Sit down, buckle up. I think you'll be surprised like me. Here you go. Allowing construction to make more market rate and infill housing. Folks, building more homes had least support. Least support. Yes, folks, if you want to fix housing, don't build more homes. That is according to the average American. How do you fix housing? Well, you restrict Wall Street. Man, we have been fed a bunch of lies. Yes, undoubtedly Wall Street is absorbing product. But folks, if you haven't paid attention, Wall Street is no longer buying foreclosures on the MLS. They are frankly contracting builders and building entire neighborhoods. You mom and pop investors, myself included, we're not playing there. I think it is really cute that you fix housing by not building homes. I don't understand. This reminds me of what we studied in the 1970s, something called price fixing. Let me just remind you, if you restrict pricing, that will restrict quantity and inflation will rage. If you don't know what I'm talking about, go back and study the 70s where they fixed prices on certain goods like oil, gas, and others. Let's see. What else do we got? Oh, let's talk about one last thing. Consumers. It does look like consumers are increasingly pushing back on big purchases like furniture and pools and refrigerators and things like that as we deal with high prices and high rates. Yes, rates matter. So at the end of the day, it will be very interesting to see if rates are lower come Friday than Monday. Will the Fed come out and be dovish or hawkish? It could get very, very interesting. Folks, I hope you have an amazing day. If you are a part of our school community, again, it's only $20 a month. That's where I will do my lives. We will do our lives in about 15 minutes. When we get to 100 school students, we will publish some material only in school. Until then, we will continually post all videos on YouTube. But yes, folks, we are at 23 or 24 as of this morning. Once we get to 100, you will see some video, some content from your millionaires. From me, only exist on school. I hope you enjoy it. I guess the last thing I forgot to mention is BlackRock's Bitcoin ETF. Yes, BlackRock's Bitcoin ETF already has 414 institutions in 3 months. Folks, we are seeing what I thought would happen. The wealthy move 1 or 2% of their dollars to this asset as an insurance policy, much like I did, 5 years ago? So there you go. All right, folks, take care. Have an amazing day. If you're a part of the school community, I'll see you in a few minutes. Later.